Tuesday's market felt a little calmer on the surface. But underneath, investors were still very nervous. The biggest reason was the Middle East. During the day, President Trump said talks with Iran were making progress. Then after the close, reports said the U.S. was pushing a one-month ceasefire framework, so it could discuss a broader 15-point proposal with Iran. But Iran denied direct negotiations, which meant the market still did not get the clean breakthrough it wanted. So the message was not the crisis is over. The message was there may be a path forward, but nothing is settled yet. That is why the market mood stayed so fragile. Investors heard possible peace talk headlines, but they also knew the fighting was still active and the wider risks had not disappeared. If this conflict keeps dragging on, the market worries about oil, inflation, shipping, and overall confidence. The Strait of Hormuz is still one of the biggest pressure points. As long as that remains part of the story, traders will stay very sensitive to every new headline. There was also another warning sign away from geopolitics. Apollo and Ares both limited withdrawals from private credit funds to 5% after redemption requests surged. That sounds technical, but the basic message is simple. When more investors want their money out, people start asking whether stress is building in places that usually look stable. And once that question starts spreading, confidence can weaken fast. So the real story of the day was not just war headlines. It was the combination of pressure coming from several directions at once. You had geopolitical tension, private credit stress, and a market that still does not feel fully secure. That is why today's trading felt cautious rather than confident. Even when stocks tried to stabilize, the market never really looked comfortable. For investors, this matters because markets can handle bad news better than uncertainty. I am Wilson. See you tomorrow.